Hey guys, what's up? Alec back with the daily stock market, and look at that, a little bit of a red day today, down $480 on the day, but we're still positive on the week, up over $2,700 and up over 11K in the last 3 months. We've been absolutely killing it. So in this video, what we're going to be talking about is 11 different stocks that are reporting earnings on Thursday. So Thursday is going to be a huge earnings day. So you're going to want to stay throughout this entire video because there's a lot of juicy stocks to talk about on Thursday, reporting earnings before the market opens and also reporting earnings after the market closes. So give this video a big thumbs up, and we're going to need to see more comments in the comment section, guys. What do I got to do to get you guys to comment more often and more frequently? Also, when you guys comment, less bots are in the comment section and leaving bot comments or spam comments too. So it really helps me out. It's a super small favor to ask, but with that being said, let's get right into the video. Now, the first one we're going to be talking about that's reporting earnings before the bell is PLTR. A lot of you guys know this stock, and they've been very choppy in the last month, going up and down. So if you can get in closer to that support of $21, that's going to be very beneficial. Now, I'm personally going to wait till after earnings announced to see how they're affected. Maybe they'll go below the $21 mark and go closer to the $18 mark. But a lot of traders are talking about that they're thinking that PLTR is actually going to show some positive momentum. So there might be a good chance we can see them closer to $25 a share or $24, $26 per share. But all in all, I would set your price alert and be patient with this one. I think anything under $20 a share is a great place to buy PLTR for long term. Although this is a little bit more of a risky stock, so it's more of a wild card of what's going on. But I would like to take a deeper dive into the financials. So if you guys want me to do a deeper dive on PLTR, I think that will be definitely beneficial, and I will do that in a future video. Also, I was reading this article, which was pretty interesting. PLTR shares are trading higher Tuesday morning, possibly in anticipation of a company's second quarter earnings on a Thursday report. The stock is a popular one among Wall Street bets community, which implies that it could make big moves tomorrow morning. PLTR Technologies daily chart analysis. If you're a TA trader, the stock is trading in what technical traders call an ascending triangle pattern and may be ready for a breakout soon. The stock trades both below the 50-day moving average and the 200-day moving average, indicating the stock is likely facing a period of bearish sentiment. Each of these moving averages may hold as a potential area of resistance in the future. The $25 price level has held a resistance multiple times and saw a fake out breakout. Again, I personally want to buy below the $20 price point. All right, so the next one reporting earnings is ticker symbol BIDU, BIDU, and they are basically flat on the week, but down 9% on the month and 12% in the last 3 months. So as you can see, they obviously peaked at about $340 per share, which is basically double at what they are at now, which is crazy to think about that they can have 100% gain ahead of them. Now, obviously, they're facing the Chinese difficulties, the Chinese lockdowns, the restrictions based off the China-based American stocks. So that's something to know about Baidu. But overall, I think that this is a great company to hold for long term. They can even put out some really, really good earnings because they still are a great company and shoot as high as $200 per share. All right, I'm not saying that's going to happen. Personally, I'm waiting for them to report earnings, and if they go down below $150 per share, I'm going to be scooping up some shares for my long-term portfolio and plan on holding them for at least a year to 2 years at the $150 cost basis. If I can even get my cost basis below $150, I currently don't own any of them. They have a PE ratio of 7, which is fantastic, and their market cap is one of the biggest in the Chinese-based stocks. And if you want to read a little bit about them, I've traded them in the past. You can actually see, you can pause that and read a little bit more about them as well. Now, another one reporting earnings before the bell tomorrow is ticker symbol GRWG. And this is going to be a Mary Jane stock, if you catch my drift there. So down 7% in the last 3 months. It's making its way up, and it's up around 12% from lows. So it's showing some upward momentum, which we like. Again, I'm going to be waiting until they report earnings. I already own 11 shares for long term. And if you even want to read a little bit more about them, they actually do the like the lighting fixtures, the nutrient seeds, trays, fans, humidifiers, dehumidifiers, water pumps, all of the supplies that goes into growing the Mary Jane. They don't actually produce it or anything like that. They do the supplies behind it, which is a good sector to be in if you believe in the MJ boom. I'm pretty bullish on the MJ sector overall, but it's hit some rough points over the last year or two. It's been booming and then it goes down. So it's basically in waves is what happens with the MJ sector. You'll see a boom and then you'll see a lot of hype fall off, and then something big will get announced. Like more states are doing it. Canada's allowing it. If it gets legalized on a federal level, I think that could be huge for something like ticker symbol GRWG. Also, keep in mind that the market cap's only 2.5 billion, all right, and the PE ratio is a little bit high, so this is definitely a little bit more of a speculative play. But for your long-term portfolio, I needed some MJ sector stocks in my portfolio, so I went ahead and picked up some Grow. I think that if anything under $40 per share for long term is going to be very beneficial. But if you can even pick up some around $35 per share, or if they drop huge on earnings tomorrow, for example, back down to below $40 per share, or they drop 10-20%, that could be an attractive price point to pick some up for long term. Now, before earnings, we also have Canadian Solar reporting earnings. And this is, for all my Canadian investors, even my U.S. investors, this is a good one to look into. If you're looking to invest in stocks outside of the U.S. or outside of China, Canadian Solar could be a good pickup for your long-term portfolio. You can even see they spiked as high as $64 before, and now they sold off a little bit. So it'll be interesting to see how they react to earnings tomorrow. I would like to pick them up under $40 per share for long term. And if you're a short-term trader, don't even think about it. This is definitely a 1 to 2 year hold or longer. The market cap is $2.4 billion, so they're still a big company, and they're pretty active on the stock market. As you can see, they have a volume of 1.3 million. All right, now if you guys want me to do a full Canadian video of all the best Canadian stocks, let me know, and I'll be happy to do that for you. And let me know if you guys want me to do a China video with all the best China stocks that you can buy on the New York Stock Exchange. All right, now we're talking about after the bell on Thursday. As you can see, Thursday is a huge day. There's a lot of stocks reporting earnings on Thursday. So now we're after the bell. All the stocks we already talked about was before the bell, before the market opens. Now we're talking about after the market is closed. All right, so Disney's the first one reporting, and Disney is at $178 per share. They've been following the support and resistance for the last 3 months. I want to pick them up around $160 per share or lower, but it might be challenging because they are so pristine of a company and they're going to report stellar earnings, obviously. However, there's going to be a lot of scrutiny around Disney because they reported stellar earnings on Disney Plus specifically. Everyone's going to be looking at their subscriber growth, and even if it's fantastic and the subscriber growth is off the charts, they're going to be comparing it to last quarter, which was amazing last quarter of new subscriber growth to Disney Plus, okay? And it might not be as good as last quarter, all right? Even though it's fantastic and the subscribers are growing, if it's not as good as last quarter, we can see Disney tank down to about $165 per share. All right, anything under $165 per share, I think is great for long term. We even saw the stock at $85 per share not even that long, almost a year ago. All right, it's gone up around 104%. It rallied, a crazy rally. All right, now if you're a long-term holder, this is going to be a staple stock for you to invest in. Dollar cost averaging, I think, is going to be beneficial over the long term. All right, the market cap is $323 billion. I think in the next 5 to 10 years, this can be a $1 trillion market cap. So definitely watch out for that and have them on your radar. Now, we still have a lot of stocks to get through, so I'm going to speed up a little bit, rapid fire mode, and let's talk about it. Wish we have reporting earnings after the bell on Thursday, down 12% on the month, 13% in the last 3 months, and they're down 59% from their IPO. I think that can easily be a $15 stock per share, or it can be a $20 stock per share. All right, this might be an interesting one to do an option beforehand, a call option, because they're very cheap. They're only about $100 per share. All right, and this can easily jump. Wish is obviously a meme stock. If they report their earnings and they're solid, they can jump 10%, 20% tomorrow. So just keep that in mind. Keep them on your radar. There's no guarantees. There's a lot of risk with Wish, especially if you're doing an option. This one can easily drop back down to $8 per share or go to new all-time lows. So be prepared. Between $8 and $10, I think, is a great place to pick up some Wish for long term. Specifically, I like investing in Wish for long term. Yes, they are a meme stock and they can move very quickly and very abruptly, but I think the true value lies in long term with Wish. If you plan on holding for 1, 2 years, even 5 years down the road, I think Wish can be built out to a very successful company. Now, Airbnb is after that, and in the last month, they're pretty much flat. In the last 3 months, they're up 5%, and they're up 117% from their IPO. I'm going to wait till after they report earnings, see if they can go down to new all-time lows or to that $135 mark. That is oh so attractive for Airbnb. I personally want them even lower than the $135 mark, so I'm prepared to be a little bit more patient for Airbnb, but I think they're a good long-term stock to be interested in overall. All right, now Rocket is a stock we've been buying in the close friends group, reporting earnings on tomorrow or on Thursday after hours. So this will also be an interesting one up, following the support for the last month, as you can see. So they're at an attractive price point currently, and they've been following this support and resistance, you can see right here, for an extremely long time. They skyrocketed. All right, we sold a lot of profits. They went back down. We started buying back in again. And I think that they can skyrocket up to about $20 per share or even higher. But I don't know if earnings will skyrocket this stock. It might take a few months longer. But for all we know, this one can go up 10% or more on Thursday after hours. Now, we also have SoFi Technologies reporting earnings on Thursday, up 2% in the last month, up 3% in the last 3 months. As you can see, they're starting to show some positive momentum right here, but they're curving back down. So it'll be interesting how they play out for earnings. If they take, I already have some of shares. I have 69 shares of SoFi for a long term, but I'm looking to average my cost lower. So if they go back to that $15 mark or below that $15 mark, you better believe that I'm definitely going to be buying some SoFi Technology for long term. They're a good fintech play if you need some fintech in your portfolio. This is a younger company. They only went public last year, that you could definitely be looking in and seeing some awesome results from them. Now, SNDL is another MJ play. They're a lot more risky. They're one of the riskiest stocks in the stock market. As you can see, they went up to $2 per share, almost $3 per share at one point. So we're waiting for that big spike to happen again or a big drop. And if they hit a big drop on earnings, that'll be a good indicator to buy in. I think anything under around 75 cents per share is a good place and a good risk versus reward. This one's a lot more risky, so go in with a mindset of you could possibly lose some money on this one. This is basically like a meme stock and as risky as they get, but they are reporting earnings on Thursday after the bell, so I thought that I would mention them. And as promised, we went over 11 stocks. The last one's going to be Tattooed Chef, up 1% on the month, up 21% in the last 3 months. They're showing some positive momentum here. Personally, I want to buy them closer to under $20 per share. I already own 43 shares at an average cost of 19, so I would love to lower my cost if they report bad earnings. I think they're going to be reporting good earnings, though, so definitely watch out to that. See if they can break above $23 per share. Would be huge breakout for Tattooed Chef and great for long term. I also own over $1,000 in my Webull account for long term. They're a plant-based frozen food company, and they're in all the targets. They're selling out of the targets. I think they're a great one to be invested in for long term. If you do have a 2-year mindset or more, definitely see some value picking up some Tattooed Chef under $20 per share. All right, guys, so that was the video. Let me know if you guys love when I do these earnings and we go over some stocks that are reporting earnings, keep you in the loop of what's going on with earnings. Smash a thumbs up, share this video with a friend if you think they can find some value in it. I shut down signups to my close friends list. So if you want to get on the wait list for when I open them back up, DM me on Instagram because I am taking applications now. I'll shoot you over an application. You can check out my website, see what's involved and everything too. If you have over $10,000 in the stock market, it's a no-brainer. Even $5,000, over $5,000 in the stock market, it's a no-brainer to join the program because even if you get a 10% gain on your money, that's already $1,000 in your account. And let's say you get a 30% gain on $10,000, that's $3,000 that you can easily be having in your account. That's how you can see I'm, making so much money, made 20K in the last year. So smash the thumbs up. Message me on Instagram if you're interested in taking your stock market investing into the next level. We just got a notification that HIMS is up 11% on the day. So that's awesome. And I'll see you in the next video. Remember, don't time the market, buy the market. Peace.